Developing story out of Washington tonight. The House passed the GOP tax reform plan earlier today, and the Senate will vote on it this evening. The new developments have just been reported. Democrats say 3 provisions in the tax bill violate Senate rules and will be removed. And this will force the House to re-vote on it tomorrow. Speaker of the House, Paul Ryan, promised that the GOP tax reform bill will cut taxes for the middle class and promote economic growth. But Democrats say the bill will mostly benefit the wealthy and corporations. In fact, new analysis finds that in a decade, 70% of the middle class will see a tax hike, while 76% of the wealthiest will see their taxes go down. We go now to Action News reporter Sarah Bloomquist, who's live in Plymouth meeting tonight, where one expert shared her thoughts on what this tax plan could mean for all of us. Sarah.
Well, Rick, that's right. We spoke with an accountant here, but we've also been speaking with shoppers here at the Metroplex this afternoon. The bill is known to be widely unpopular with the American public, and we found that to be very true here today at the Metroplex. There's anxiety and apprehension over what it will mean for taxpayers. Holiday shopping was on the minds of many this afternoon, but we also found shoppers were thinking about today's vote on the tax bill and what it might mean for them.
I can't really figure out what it's saying. I hope it doesn't mean that the rich get richer and the poor get poorer.
I believe sincerely that it's not for the average American person. And the Republicans have just made a sham of it.
The bill alters the tax brackets and lowers rates. For example, the top rate would drop to 37% from 39.6. CPA Jennifer Romberger says most Americans will see more money in their February paychecks.
You know, they hear, oh, it's only going to help the rich, so immediately they think it's not going to help them. And I don't think that's the case.
Taxpayers may no longer want to itemize deductions, as those itemized deductions may not be as high as the new standard deduction.
With regards to property taxes and also income taxes you pay to your state and your local, that deduction, which is an itemized deduction, is capped to $10,000. Now, the standard deduction, however, has doubled.
The child tax credit will double for families making up to $400,000. People who bought their homes before December 15th can still deduct mortgage interest up to $1 million. Those who bought homes afterward will see that amount lowered to $750,000.
It's just important to work with an advisor or to crunch the numbers yourself. You know, just like anything, it's best to be prepared.
And one of the biggest moves, the bill slashes the corporate tax rate from 35% to 21%. That's a permanent cut, while cuts for individuals will expire in 2026. Finally, the bill repeals the requirement that all Americans have health insurance or face a penalty.